Good evening, traders. This is TonyD from easyMarkets in Sydney. We've got TraderTalk today, Friday, September the 15th, 2017. Big moves overnight as Super Thursday didn't disappoint. You had strong Aussie jobs numbers in the morning. Then the Bank of England coming out with a hawkish hold. 7-2 was the vote, but devil's in the detail with the statement saying majority of members expected rates to move higher in the coming months. That puts November on the cards, is potentially there. Brexit negotiations are doing nothing to slow down the rally at the moment. In fact, there's some positive news coming out there in terms of direction. Those talks are heavy. So while we're pretty heavy in terms of the size of the move, the backing there and the momentum and the technical breakout higher on the pound definitely has to be respected. And if you're going to get into trouble there trying to sell it, if it wants to go up towards those previous highs, given that the the pound didn't involve itself in any of the recent US dollar selling rally that the euro got, then the pound, by all regards, without Brexit, would be at 150, 160 quite easily. So the recovery here in the pound could have some legs. In terms of the previous levels, 138 on the cards as a topside target in coming months, especially if they're raising rates. And it seems to be going to its own tune. So it's in regards to what that means is that it doesn't really rely on US dollar weakness or strength, and it's sort of setting its own beat. It doesn't really respond too much to the US data at all. So in regards to what we're looking at now, in US dollar terms, there was a strong CPI number that came out overnight. Now that CPI number from the US puts the chances of the Fed raising rates in December back to 50%. And what this does is it does open up the road here for market to buy US dollars because they've been selling for so long, and speculating that the Fed's going to be more hawkish or open to raising rates at the next meeting coming up next week. We'll talk about the still need for raising rates, a little bit more hawkish tone, a little less concern about the low inflation they've seen for the last 5 months. So what we've seen dollar yen back off the 111 though, where it did test right away. That 111 did see the market pull back because at the same time we got reports that North Korea was prepping to do another missile launch. That proved to be correct because this morning around about 7 a.m. Sydney time they did do a missile launch, and that sent the dollar yen back below 110. Very briefly though, the market's rebounded, almost shrugging off that North Korea news. It looks like we can move forward a little bit more optimism regarding North Korea, shrugging off the ability for the market to follow through on that selling. Really requires a military response, and given that there's been lots of sanctions just given, and that this missile test was well expected for the last week, that there wasn't that big a follow-through sell-off. But still, Trump is going to respond probably here, and what we might see is the market can follow through with more risk off if he's a little bit more aggressive. He seems to not favor sanctions. Talks very tough when he's talking about the subject, but that at the end of the day, military conflict is probably not on the cards just yet, as they haven't really pushed the button or done anything to cross a red line there from North Korea's side. Just trying to looks like get a better negotiating stance for when negotiations finally do begin. All right, now in terms of the Aussie dollar, it couldn't hold above 80 cents. It's back at 80 cents though after that strong CPI number. So it isn't getting sold off aggressively. So you can make the argument here that it's range trading around that 80 cents level, and really looking for inspiration there. Potentially, if the US dollar was to recover though, then it would have a hard time continuing to do well. But certain other pairs like the Aussie yen is well supported on dips, and some of the major crosses like the Aussie Kiwi is definitely well supported as well. So Aussie's not too bad, but it's definitely not where the action is, so a lot of traders aren't really focused on it right now. If you want to have a chat with me about some of the topics we talked about today, or the outlook here for the US dollar, and the Fed next week, what's going on in the yields, just give us a call with the number below. If you're not a member of the Active Traders group, please give us a chance there to work out your business, see how we can improve your trading. Not just with research, but also personal market updates and overviews of your trading. Thanks, guys.